The stock market had an absolute wipeout today, and so did the dollar, breaking key levels of support, now trading around 101.6 and falling at the time of recording this video. Meanwhile, against all odds, gold continues to rip higher. We have major moves to cover all across the market in today's video, and all I ask as we get started in this video is that you hit the thumbs up button. Let's go. And taking a look at this reciprocal tariffs chart, you can see what really caused the sell-off. What you can see here is we have China, EU, Vietnam, Taiwan, Japan, India, South Korea, many countries where tariffs have been charged to the US on their imports. And then, of course, the Trump and team put their USA discounted reciprocal tariffs. Now, there's, of course, controversy, as there always is, about how this calculation on the left was made with quote-unquote currency manipulation, etc., trade barriers, whatever. The point here, though, is that this right here surprised me and many others. Well, it surprised the market itself, because the tariffs in many ways were actually sharper increases than some expected. Now, at first, the market actually bounced sharply when the topic of a 10% broad swept tariff was introduced, because that was far better than what people were fearing. People were fearing like 20% tariffs. Then we got this board, and like I said, it surprised many to actually become kind of a bigger tariffs than expected. So what we can see here is China, a huge trade partner, 34%, but it's not just 34%, it's 34% in addition to the 20% that he recently added. So 54% tariffs on China. Now we can also see the European Union, Vietnam, Taiwan. These are some pretty big trade tariffs that are being imposed or have been imposed now by the United States on many of these trade partners. And so it's fair to say that this is a market that is in free fall because of the shock to the system. This changes things drastically in the form of trade, because now there's many more questions that just opened up, like how are countries going to react to this? Is China going to come to the negotiation table? Is the EU going to try and work with Trump? Or are they going to band together against the United States? And is this trade war going to be a long, drawn out, and painful experience that could send us into a global recession? Things have definitely escalated, and I do want to say on my channel, I've been recently saying that I thought there was a good chance that tariffs would come out not as bad as expected, but in actuality, they are pretty extreme, and Trump seems to be sticking it to the world, if you will, on his intentions to add more tariffs to, in his mind, balance the trade dynamic between the United States and other places. Now, regardless of your politics on this, what does this do to markets? Let's focus on the data. So one thing to focus on this morning is the services PMI number, which came in at 50.8 compared to the forecasted 53. Now, this is still above 50, which shows growth expectations in the services part of our economy, but it's much less growth than what people were expecting previously. The forecast for 53, then actually coming in at 50.8. Manufacturing expectations also slooped this week, with a forecast for 49.5 on this index actually coming out at 49. And you can see when we take a look at an updated economic heat map for the United States, there is some problems here. There's a lot of red when we see the surprise index here, and the US dollar is down quite a bit here for a good reason. A lot of the economic data is now suggesting weakness. So when we look at the dollar index sitting at 101.72 here today, the question is, how much further can we really go? Well, again, we just took out a key level of support. It looked oversold, bounced slightly, and then sellers took full control, pushing it down once more. Again, the concept now, which is interesting, is that the market is actually telling you that it thinks that these tariffs are actually going to be net destructive to the United States. Now, the market sometimes could be right, could be wrong. I'm not here to debate or get into the controversy, but I'm telling you what the market is telling us, right? It's telling me dollar index is down so much because it's worried that this could lead to serious economic slowdown in the United States. There is, of course, the potential that resolutions are around the corner with this stuff, meaning basically if there's some positive negotiations between Trump, team, and other countries, there could be the optimistic viewpoint to take, which is maybe things resolve sooner than expected. But right now, the concern is that these countries are going to respond with aggression as well. And many countries banning against the United States does not necessarily bode a great expectation for US economic activity. Now, the thing you could throw back is, well, other countries are also reliant on the United States. Won't they want to negotiate? I would say probably. Being optimistic about this, I think that there's a good chance that negotiations are around the corner. But right now, the market is trading with what it's got, which is we've got big tariffs, we've got a whole bunch of uncertainty, and the U.S. economy could be in a bit of a pickle. Now, if we scroll out, we've got a little bit of a support level here for the dollar index, but really I don't see major support until you get back down to this 100.5. So it's very possible that the dollar index could continue lower, and I have continued to be bearish on the dollar at this time. In fact, this morning I closed out of my NZD USD long position that I shared inside of our VIP room for 121 pips, and I'm also still long Euro USD. Both of these trades are working out phenomenally right now. But to be transparent, I'm also long CAD Swiss, and this is not working out so well. So I've got 2 winners and 1 loser on my currency trades. Here's a look at the Euro USD. You can see we came down to this support level. I added in some longs here, and with the big pop here at one point, the trade was up at a peak here of about 350 pips. Giving back a little bit, I'm holding out to see if we can make a push up to 1.12 on the euro against the dollar. And here's the Kiwi dollar trade. I ended up going long right around here, closed out this morning for a profit inside of the VIP room. By the way, if you'd like to get access to the Discord, it's linked in the description below. And just a quick reminder that the Edge Finder 40% off sale is currently live. It's our biggest discount that we do all year long. And if you have any questions, please feel free to chat with us directly using the first link in the description. If you use that, we'll also give you an extra 5% off just for taking time out of your day to speak with our support team. The Edge Finder has helped traders all around the world take the markets into their own control by looking at the data closer, fundamental analysis, economic data, sentiment, commitment of traders data. We build tools that help traders get a better grasp on what's really happening in the markets. So don't miss this opportunity. It is the biggest discount that we do all year long, and it's the lowest price you can possibly get on the Edge Finder. That sale will be ending soon. So like I said, all the information can be found in the description below. Let's take a closer look at metals now. You can actually see that we saw a sharp reversal here briefly on the price of gold, but have since then bounced up at the time of recording this video. I'll give you guys my thought because someone on the live stream today actually asked about gold. What do you do in this situation when you have the idea to potentially get long, as I do, but you missed your entry? And the answer is you really can't do anything, right? You have to be patient. In fact, what this actually ends up doing when you chase a trade is oftentimes it reinforces bad trading habits. So if I were to go out and take a long trade on gold, maybe it works out. Maybe gold rips from here and I would make money on that trade. But sometimes making money on a trade does not necessarily mean it is a good trade. A good trade is something where you stick to your rules and you build good habits that are sustainable for the long term. You're managing risk, you're making educated guesses, and you're being patient. So what I'm personally waiting on for the gold movement here is a swing low to a swing high retracement to this 38.2% retracement zone. If we get a move down to something like 3,040 an ounce, that may be an opportunity where I look to take a long position on my first attempt to get long gold. If that doesn't work out, what I'd probably do is I'd map out a 50% or even a 61.8% retracement zone of support. And as long as the fundamentals still look good at that time, I could potentially look for a long setup. I've been really bullish on gold this year, and it's actually been the best performing thing I've been trading. And so I want to stick to what's working, which is basically metal longs if I can find the right setups. But again, sometimes you got to wait and be patient. And I'm on the sidelines with gold. I took a really nice trade from this swing low up to this area here, closed out, and I wish I stayed in the trade, but now I'm waiting for an opportunity to get back. And the only way I can get back into this trade constructively is to wait for a proper pullback and to make sure that the fundamentals still align with my theory when the technicals line up for a trade. And at this time, with economic heat map data coming in soft for the US dollar, this definitely looks like a environment where I want to take long setups on gold. Reminder that gold typically does well when the US dollar is weakening. And gold is a very bullish reading on the Edge Finder, giving me that extra confirmation. So at the time that I'll take a trade, I'll check to see, is the top setup still pointing gold bullish? And if so, I'll probably take the trade. And of course, I'll share that notification inside of our Discord server if I do take a position. So I closed out of my silver position here recently with this ginormous sell-off. I trailed stops, got out of the trade, and now with this ginormous drop, the question is, do I get back into the trade? But the answer for now is no. I think we've lost a little bit of the momentum on silver. You can see the trend score here filtering to a red -2. So neutral reading on silver. If we do start to see constructive higher lows on silver, maybe I'll get back into a trade and try this one again. But right now, I think a little bit of this momentum has been lost for the time being, and I think I'd rather stick to gold, which seems to be having a little bit more of a smooth price action movement. Copper's down 3.6%, large sell-off here, just showing economic resilience here globally, maybe under stress. And you can see same thing with oil, back down towards those lows. This is good for the gas pump, but maybe not so good for economic growth globally. And remember that if oil continues to crash off of a cliff, what this often is signaling is expectations that global growth and recession could be a threat. Like I said, it's good for us at the gas pumps, but may not be so good if people start losing jobs. And bonds continue to rip to the upside, TLT doing quite well, with yields dropping off of a cliff, basically off the idea that we may see some economic contraction. It's an interesting time. Unbelievably, Bitcoin has actually held up pretty well in all of this. I mean, given that from yesterday's high, it dropped about 7.5%. Yes, that's a lot, but to be completely honest, had you told me this kind of reaction from the stock market, I would have guessed Bitcoin would be down in the 70s by now. So a bit of relative strength in my personal opinion in terms of Bitcoin. The VIX is up 30% on the day, just showing you the kind of market that we're in. People are really scared. Also evidenced in the put to call ratio, which once we get today's price action data, which we get at the end of each day, I imagine that this is likely to jump up even higher. There is so much fear in this market, and I want to just give you a little bit of a mapping of what I'm personally doing in this market. So my outlook on stuff right now is that indices look pretty ugly in the short term. In the long term, I continue to add new shares to stocks that I really like on companies that I think have a long-term bright future ahead. But in the short term, things like NAS 100, S&P 500, the Dow Jones, not really interested in taking long positions. So where has my active trading focus been? Well, it's been on the metals and it's been on currencies. This is something I did in 2022. I really shifted my focus during the last major bear market into focusing on currencies and metals. And I think that I have a lot of potential here to continue to find great trades in this area and put indices on the shelf for now until there's a more stable kind of market trend. I like to trade on the active basis indices quite a bit, but at a very high VIX level, the sell-offs can be so sharp and extreme. I like to wait for things to steady out and just trade kind of a trailing stop approach on indices. That's what's worked well for me over the years and what I'm going to continue to do. The pound US dollar also seeing a big bump here today because of course the UK actually kind of got off relatively easy in terms of some of the other places. UK tariffs at 10% are far, I suppose, better or advantageous in comparison to like China, the EU, etc. And we just recently added a new feature to the Edge Finder. It's the Top Setups Eco page. Now, the reason I added this page is because a lot of people were requesting from me and my team that we build something that really helped us to focus solely on the economic data. In the top right, I've selected for only major currency pairs and minor currency pairs. And what we've done here is we've focused in on the growth, inflation, and labor statistics data for each economy. What this allows us to do is focus on the economic data rather than anything else, like COT data, trend. We put all that to the side, and we really just focus on these data points here to get an idea of which economy might be strong or weak. This was part of the reason why I went long these two currency pairs, the CAD Swiss and the Kiwi dollar, and the Euro US dollar for that matter. So I do intend to be using this Top Setups Eco page quite a bit, especially for my mean reversion trading style with currencies. And just a reminder, that sale will be ending soon. It is our biggest of the year. So if you want to also be using the Edge Finder, I highly recommend you take advantage of our one-time price at 40% off. It's a lifetime access. You don't have to pay again, and you get it for a one-time payment. All information can be found in the description below. Today, I spoke on the Market Insights podcast with Johnny and Kenny, and we discussed a little bit about what's going on with these tariffs and what other countries may do in retaliation. Highly recommend you stick around for a few minutes, and if you want to hear the full podcast, we'll leave it linked in the description and pinned comment down below.
It's quite a day. It's the morning after, or the day after, what was quite a historic few hours, wasn't it? Where you are, Nick, in the United States. Wall Street opening with massive falls this morning in the wake of President Trump's reciprocal tariffs that came into effect almost immediately. Nick, I first wanted to ask you, initial market reaction where you are was pretty bad, wasn't it?
Well, Johnny, the initial reaction and then the follow through, really. We've seen at the time of recording this podcast, we've got NASDAQ and S&P 500, Dow Jones, all of them at session lows. And it has ricocheted in pretty much most stock markets around the world. The DAX is down 3%. The Nikkei is down 2.7%. Chinese stocks are down. And the VIX is up 32% on the day. Dollar index taking a 2.2% hit on the day. And gold and silver even seeing some sharp sell-offs briefly. Gold actually recovering many of those, or much of that loss already. But yeah, just a major kind of gut check to the markets, really resetting the expectations going forward. And there's a lot to talk about here. We have so many markets that are making substantial moves. I'm sure that we have a busy job in front of us. But really, to your point, Johnny, about the quote-unquote game show concept, what's interesting yesterday was as Trump came out, he initially set the baseline at a 10% tariff, and there was a sharp market reaction to the upside. I mean, we saw NASDAQ was up 2% in moments, right? Because that was the oh my gosh, we're only getting 10%. So clearly it shows you where the market was positioned for. It was not positioned for a 10%. And in fact, what happened is then the board came out, and I made this joke on a video that I made yesterday. If he had just left that board at home, markets would be looking real different right now, but he did not. He brought out that board, and with that board came actually, to my surprise, I have to, of course, call, a spade here. I've mentioned on the podcast that I thought things would actually not exceed worst case expectations, and in many ways they actually did. The market's reaction to the downside in terms of an options volatility expectation is somewhat kind of what was forecasted in terms of market momentum or volatility, but in many ways what we saw from the tariffs did exceed some of the feared expectations. Many people were saying maybe he's going to do a 20% sweeping tariff. Well, notably, some of the key trading partners like China saw sharp movements or sharp increases in their tariffs. China had a 20% tariff, but then yesterday's 34% additional that does it is cumulative. 54% tariffs on China. And that is a ground-shaking change to trade dynamics. Markets are scared, and they have a reason to be. Big change is always concerning. It's like when you move to a new place or start a new job, there's always something to be nervous about. And this, of course, takes the cake for market sentiment right now. Just to briefly mention, because I know we have so many things to talk about today, services PMI came in real light, and it hardly moved the market. Just goes to show you the grip that tariffs and the worries about them on this market had. 50.8 for services PMIs this morning, showing both contraction this week. Under the radar here, we had manufacturing and services PMIs come in soft this week, pointing towards some expected slowdown in economic growth going forward.
Of course, with those very high China tariffs, that has obviously had a big effect on the likes of Apple, Nvidia, Amazon, and so on, because they're pretty much dependent on China when it comes to production line. It was interesting to note also those very high tariffs against Vietnam, against Cambodia, because some have suggested that those countries are used as a conduit by the Chinese in order to avoid those tariffs. But they didn't get off lightly at all.
Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.